Step right up, folks, and dive deep into the mysterious, meme-filled world of the WallStreetBets Iceberg. Much like the colossal ice chunks bobbing in the ocean, there's a lot more than meets the eye. The most titillating, tweetable tales of stock market shenanigans float above the surface, but the true substance lurks below, hidden and hushed. Picture this: a financial iceberg, its peak glistening with memes and hype. But beneath the waterline, a massive, complex structure of retail traders, short squeezes, and options trading. And let's not forget the allegations of market manipulation and the potential legal and regulatory risks. Oh, and we can't leave out the fundamentals, those often overlooked yet crucial elements like a company's financial health, earnings, and long-term prospects. Intrigued? You should be. Stay tuned, folks. We're about to explore the tip of the iceberg. Welcome to the tip of the iceberg, where memes rule and stocks move at the speed of hype. Now, let's dive into the world of WallStreetBets, where your average Joe can become a stock market superstar overnight. All thanks to the power of memes and social media hype. Picture this: a sea of Reddit users, each armed with their own unique set of stock market memes, all vying for attention on the digital stage. It's a whirlwind of wit and wisdom, where the funniest joke might just be your ticket to the next big stock market rally. From Dogecoin to GameStop, the memes and jokes that flood WallStreetBets are more than just digital doodles. They're a form of social currency, a way for users to share their insights, predictions, and often their wild optimism about the future of certain stocks. And when these memes catch on, they can drive an incredible amount of hype around a particular stock. Imagine a snowball rolling down a hill, picking up more snow as it goes. That's what happens when a meme goes viral on WallStreetBets. As more and more people join in on the fun, the hype around a certain stock grows bigger and bigger. This can lead to rapid price fluctuations, often resulting in short-term gains for those who are quick to act. But it's not all fun and games. Behind every meme, there's an investor hoping to strike it rich. The stakes are high, the risks are real, and the market is unpredictable. As the saying goes, the stock market can stay irrational longer than you can stay solvent. So, while the jokes and memes might be the life of the party, they're just the tip of the iceberg when it comes to WallStreetBets. Beneath the surface, there's a whole lot more going on. From retail traders to short squeezes, options trading to market manipulation allegations, it's a complex world that requires a keen understanding of the market dynamics at play. But remember, folks, there's more to WallStreetBets than just memes and hype. Let's dive deeper. In the blue corner, we have the retail traders, the Davids of the stock market world. You might be wondering, who exactly are these Davids? Well, imagine your everyday Joe and Jane, armed with nothing more than a smartphone, a trading app, and a dream. They're the retail traders, the small-time individual investors who are shaking up the world of finance. Now, these Davids aren't just a handful of people. Oh no, they're a growing army, taking on the Goliaths of Wall Street from their living rooms and coffee shops. And when I say army, I mean an army. Millions of people worldwide have jumped on the retail trading bandwagon, making their mark on the stock market. But how can these Davids even stand a chance against the institutional Goliaths? Well, here's the kicker. Through the power of social media, these individual investors have found a way to band together. And in doing so, they've managed to wield a power that rivals the big players of Wall Street. Let's take a stroll down memory lane to the year 2020. A subreddit community known as WallStreetBets rose to fame when these retail traders collectively decided to buy into the ailing company, GameStop. What followed was nothing short of a financial earthquake. GameStop's stock price skyrocketed, and the Goliaths who bet against the company found themselves in a world of hurt. But don't get it twisted. This isn't a fairy tale where the Davids always triumph over the Goliaths. The world of retail trading is a roller coaster of ups and downs, filled with risks and rewards. And while some Davids have found success, others have faced the brutal reality of financial loss. So, while these retail traders might not have the traditional clout of institutional investors, they've shown that they can still pack a punch. They've proven that in the world of finance, size isn't everything. But what happens when these Davids decide to squeeze the Goliaths? Let's find out. Scene script. Ever wondered what a short squeeze is? Imagine squeezing a lemon till it squirts in your eye. Let's say you're at a lemonade stand. You've got this lemon, right? You squeeze it, expecting some juice, but instead it squirts right in your eye. Ouch! That's a bit like a short squeeze in the world of stocks. So, what exactly is this financial citrus calamity? Well, in the simplest terms, a short squeeze happens when a stock's price shoots up, forcing those who bet it would fall, the short sellers, to buy it back at a higher price to minimize their losses. This rush to buy even further boosts the stock's price. It's a vicious cycle, or a deliciously sweet revenge, depending on which side of the trade you're on. Now, let's talk about some real-world examples. Remember GameStop? In early 2021, this video game retailer's stock was heavily shorted by hedge funds, betting that its price would fall. But the sprightly traders of WallStreetBets had other plans. They started buying GameStop shares en masse, driving up the price and causing a classic short squeeze. The result? Those hedge funds found themselves in a sour situation, like getting a lemon squirt in the eye. They had to buy back the stocks at a much higher price to cover their short positions, leading to billions in losses. Meanwhile, many of those cheeky WallStreetBets traders were laughing all the way to the bank. However, it's important to note that not every short squeeze is a success story. It's a high-risk strategy that can lead to significant losses if the stock's price doesn't increase as expected. It's like trying to make lemonade, but your lemons are bad. You're left with a sour taste and nothing to show for your efforts. But it's not all fun and games. There's a darker side to WallStreetBets. Let's take a look. Now onto the stormy seas of market manipulation allegations and potential legal risks. Just as the mighty Iceberg can be a danger to passing ships, the world of WallStreetBets is not without its own hazards. One of these is the specter of market manipulation. Some critics have pointed a finger at the Reddit community, accusing it of orchestrating coordinated buying efforts. They argue that these mass actions can artificially inflate or deflate stock prices, leading to unnatural market movements. Imagine a swarm of ants, each individually tiny and insignificant. But when they act together, they can take down a creature many times their size. Similarly, when retail traders band together in a coordinated buying frenzy, they can cause seismic shifts in the stock market. But is this manipulation or simply the power of collective action? The jury, so to speak, is still out on that one. But what about the legal and regulatory risks? Well, the financial world is a labyrinth of laws and regulations designed to ensure fair play and protect investors. Violating these can lead to hefty penalties and even criminal charges. So it's crucial to understand that while the world of WallStreetBets can seem like a thrilling rollercoaster ride, it's not a lawless Wild West. The authorities are watching, and they have proven they are not afraid to take action when they perceive wrongdoing. And let's not forget the very nature of WallStreetBets' actions puts it in the crosshairs of regulatory bodies. Their activities, especially when it comes to coordinated buying, could potentially be viewed as market manipulation, a serious offense in the world of finance. So if you're thinking about diving headfirst into the world of WallStreetBets, be aware of the potential legal risks. Ignorance of the law, as they say, is no defense. So folks, remember, WallStreetBets is just one part of the financial landscape. Always do your research before jumping into the icy waters of the stock market. Well, folks, we've explored the WallStreetBets iceberg from top to bottom. We've laughed at the memes, marveled at the power of retail traders, and witnessed the squeeze of short sellers. We've navigated the choppy waters of market manipulation allegations and peeked beneath the surface at the fundamental factors that can impact stock prices. We've also acknowledged the potential legal and regulatory risks that come with the territory. It's been a wild ride, hasn't it? But remember, this iceberg, like any financial instrument or strategy, requires understanding and caution. It's not just about the tip that's visible, it's about the massive block of ice underneath. So, before you dive in, make sure you've done your homework. Understand the risks, the dynamics, and the forces at play. Whether it's a meme stock, a short squeeze, or an options trade, know what you're getting into. And remember, in the wild world of WallStreetBets, always stay frosty.